Thanks, Elaine. Well, the social media industry is poised to grow larger in terms of market value. That's after microblogging service Twitter filed for an initial public offering in a short message, of course, known as a tweet. Analysts say its IPO is one of the most highly anticipated offerings since Facebook. Now, joining us live with more details is CCTV's Tracy Tannen and Joe Do, who's the economics analyst at The Street. Thank you for joining us, guys, tonight. Let's start with you, Tracy. What details do you have about this last-minute announcement from Twitter?
Twitter, that's right. One of the most highly anticipated IPOs since Facebook filed that last year. Karina, we don't have that much information at the moment because Twitter, as we know, filed a S1, a confidential S1 to the SEC, which are the U.S. regulators. And so what that means is we don't have any financial information about Twitter at this stage. But what we do know is that in order for Twitter to file a confidential SEC, that essentially means that Twitter has to be making revenues of under $1 billion.
Okay, so we know less than $1 billion as their annual revenue. But what is the advantage of doing it in secret like this?
Well, there are a few advantages. Firstly, this private filing of the S1 filing, which was something that was initiated by President Obama back in 2012 under the Jobs Act. That's Jump Our Business Startups Act. And it essentially gives Twitter some time to really, work it out with the SEC and figure out whether or not
the timing is right.
The timing is right, or whether they should wait for their IPO filing.
Okay. Now, talk to us about, Joe, about valuation here, because we've seen on the secondary market, there have been a lot of investors very interested in Twitter. BlackRock invested, I think it was $80 million at the start of 2013. They valued the company at about $9 billion. We're hearing a number of $10 billion. What number do you see?
Right. We're starting to see these numbers kind of jump up. At the end of August, one of our reporters at The Deal, which is part of TheStreet.com, covering IPOs, they said they're thinking right now at about $12 billion. And the source that our reporter had been talking to said they didn't think it would be more than $15 billion. I was talking to that reporter tonight and said the number could be going higher, maybe possibly $14 billion. And that $15 billion threshold that we saw just at the end of August may not even be the threshold anymore, but up to that point, it was about 12 million.
Well, interesting that you say this, because this is sort of the same thing with Facebook. We had a lot of hype before the IPO, and of course, it crashed and burned. Now they're back up, shares trading above with the initial offering, but still a lot of hype with that company. And the big question is with Twitter, as with all these social media sites, is how do you monetize mobile? And what do we know about Twitter and their monetizing strategy?
Well, Twitter has their promoted tweets, right? And a big thing about the promoted tweets is they send it out. Everybody sees it at the top of their Twitter feed. And if they retweet it, there's a certain amount of money that the company pays to Twitter for having been retweeted. So a few years ago, one of the most retweeted tweet was a Wendy's promoted tweet. And so every time it was getting retweeted, or at least now it would be, earning a significant amount of revenue for the company. I mean, obviously it's not like a huge amount per tweet, but it does add up. Another big thing is Twitter just hired the former CEO of Ticketmaster. And so there's talk about them starting to promote live events. So if they start moving into live events, maybe they start offering some sort of subscription to bring into the, to jump into those live events. It could be interesting.
And Karina, also Twitter has been trying to tap into the mobile advertising space a lot recently. In fact, earlier this year, we saw Twitter acquire an advertising startup company called Mopu for $350 million. So they're really trying to make that move as well to really help monetize their customers.
Yeah, that is definitely key to their growth going forward. I want to talk to you a little bit about some of the winners and losers among some highly anticipated tech public IPOs. On the winning side, we have LinkedIn, Zillow, and Yelp up 300% since their IPO. On the losing side, we've got Groupon and Zynga, which are down 40%. From both of you, which side of the column do you think this IPO is going to fall in?
Well, I think Twitter has been very careful with their secondary market shareholder offerings to a point where they've even put language into contracts where if one shareholder wants to sell, they go to another person who wants to buy, and if someone agrees to that, Twitter can come in and say, we're going to buy that share back. Wow. So they're trying to, it's obvious that they're trying not to make the mistakes that we did see last year with Facebook.
Yeah. And in terms of mistakes, there was a big debacle when Facebook had its IPO, a lot of problems. Not only the share price tanked, but we had issues with trading on the day of when it started trading at the NASDAQ. Where do you think is the right fit for the company to be listed?
That's definitely a very hotly debated topic. And in fact, both the stock exchanges, the New York Stock Exchange and the NASDAQ, have been in a somewhat, tug of war as to trying to get these tech companies to list. We know, we know that the New York Stock Exchange has LinkedIn. We know that the NASDAQ right here has Zynga and Zillow. There was a lot of noise and chatter, funnily enough, in the Twitter sphere today about where they're going to list. And a lot of people were saying there's going to be right here at the NASDAQ. Yes, the NASDAQ botched Facebook's May 2012 IPO. It cost Facebook tens of millions of dollars in lost money. But despite the trading snafu, it's not only just the NASDAQ that has trading snafus, the New York Stock Exchange does too. But it seems that Twitter is likely to list right here, Karina.
Interesting. And of course, the timing of when this is going to happen is a big question. Do you think it's going to happen before the end of the year?
I mean, it very well could. With Facebook, you saw kind of like a 5-month time span where the S1 was filed or the S4, and then we actually saw they went to their roadshow, and then after the roadshow, we had the IPO. I mean, the big thing on the S1 filing, it's confidential, but the moment that IPO takes to the roadshow, or decide they have to go to the roadshow, 21 days before that, they've got to release all that information for public
to the general
knowledge.
public.
That's right.
Okay,
yeah.
not just to the potential investors.
Right. So we'll have a 21-day heads up.
Okay,
maybe
good
when
stuff.
we're starting getting
Good
close.
stuff. Thank you both so much for joining us tonight. That was CCTV correspondent Tracy Tandon and Joe Doe, who is the economics analyst at The Street. Thanks.